Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 138 for September 1st, 2020. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we will be discussing your trade ideas. I have the option professor back, and he will be going over the list and talking about the markets, and you are seeing his screen right now. So I'm going to go ahead and turn it over to him.
Okay, thanks a lot, David. And yes, optionprofessor.com is our website. And at the end of the broadcast, we'll explain how you can get a free weekly update each week, which will explain some of the opinions and observations we have on everything from the stock market, bond market, currency, gold, silver, oil, grains, the whole 9 yards. So we'll talk about it at the end of the broadcast. I've been in the investment arena here for decades, so I'm very experienced and knowledgeable in the area, and I'll share my opinions and my observations with you here today on stocks. We got 15 of them here, and I'll give you some other stuff that I'm looking at as well. All right, let's take a look at the broad index so you get put it in perspective on what's going on here. I'm going to show you the S&P 500, and as you can see, it's been a steady riser ever since it turned positive. I'll get it back in queue here. And so we're using, in this case, a relatively short moving average, which keeps things on a short leash. And when we're at these levels that we are now, you want to have some type of a short leash if you're looking to either hedge or lock in some profits. But anyway, as you can see, the S&P bottomed out at 2174, and then it had a rally up towards 26 area, 2660, which was a 38% jump. 50% jump took you to 2790, which is around 2800. So that was your 50% throwback. And then your 61% throwback was around $3,000. So basically, the real true breakout was above the 3,000 mark. And as you can see, after it did that, it has not looked back. So that 3,000 area on the S&P is an area that I would mark, in that if there ever was a correction, that might be a logical place if there was a significant correction for the thing to come back to. That and 3,200, which is those highs right there, and that low over there. All right, that's the S&P. And then you've got the Nasdaq, which obviously has all the tech in it. And let's take a look at that and see what that looks like. Okay, there you go on the Nasdaq for the last year. Cue that up. Come on up. There you go. All right, there you go. So as you can see on the Nasdaq, it also bottomed there in March, and it went positive here on our moving average at about 7,300 or so, 7,350, and it's been a pretty much straight ride up. Now, you know, when the average continues to rise, that's very bullish. So what that means is that when you get pullbacks to the average or barely through it, that wouldn't mean you'd get rid of anything, because the direction of the moving average has pretty much been uninterrupted on the whole way up. Right now, that average comes in at around 11,800 ballpark figure. And so that would be a number that you'd want the S&P, the Nasdaq to stay above. And a lot of you guys trade QQQ, so let's give you a QQQ number here. And again, we had the best August since 2000 on the Nasdaq, and we had the best August since 1986 in the S&P. The only troubling thing about that, they were both followed by pretty big crashes. So you got to be a little bit on your toes here to make sure you come away with money. And right now on the QQQ, the number comes in at 287.70. So anything under 285 obviously would be problematic as far as the short term is concerned, possibly. Okay, but just like the S&P, that moving average has been rising, and comes in right here. So that's not too much of a leash, but about 15 points or so from where we are now. So you know, keep an eye on it. And again, one of your tips, if you're looking for a turning point on anything, is to find a high point surrounded by lower highs, and then you might get some kind of correction. Here you had a double top, but you had a little bit of a correction. But ever since then, it's been higher, high, higher, high, higher, high, all the way up. Okay? So basically, that's your broad-based lens on what's going on in the markets right now. And let's see. Let's start out with your first stock here that everybody's looking at. Obviously, Nvidia. So we'll put Nvidia up, and we'll look at it from a 1 year, 6 month, and a 1 month basis to get an idea of different time frames. Okay, Nvidia, I think had a pretty good sized day today. Let's see what the numbers turned out to be. Yeah, up 17 points, 3.5% compared to Zoom. It's nothing, but it's not a bad run considering how far you've come. All right, so what's it telling you here on a 1 year is that the 1 year on the short-term average comes in at around 512. We're up at 551. You have a high point today of 560. Let's see how long that 560 lasts. The longer 560 lasts, the more possibility you could pull back. RSI is into the highest blue area that you could get. So, you know, it doesn't always have to come down. It was here last time in the blue, came down just a little bit. Was here in the blue and came down a lot a bit. And then it's been in the blue a couple of other times and had some small pullbacks, small pullback there. So let's see what happens here. Again, you know, it's hard to make any sense out of things. So one analyst put it very well. He says, with unlimited QE and with zero interest rates, I mean, how do you evaluate anything? So using the standard valuations on things obviously makes no sense, and it's basically valueless at this point. So if you can't evaluate something, you can certainly follow the price, and that's why I like to keep a look at these moving averages and the RSI. Obviously, it's very tough to initiate positions when RSI is at 82. And so you have to be somewhat careful on a short-term basis. That's why I'm saying if you're in this stock and the 560 high has occurred, then you look at that as your line in the sand temporarily. We go to 565 tomorrow, you got a new line in the sand, okay? So this thing has gone through the roof, and we all know why. Everyone needs their chips, and the consoles are using it, and all the games, and you got Bitcoin as well. So you got like 3 big bites at the apple, and these guys are just, you know, on everybody's want list. Okay, so there you go on Nvidia. Now let's see on a short-term basis, like on a 1 month basis, if there's anything different going on. Yeah. Here, again, the shortest leash you'd put on it on a 1 month basis is around 545. Again, you got a high point there. If you break that little neckline there and you broke under 545 and you were a short-term speculator, that might be something to look at. So that's another way to look at it on a shorter term basis. Okay. On a 6 month basis, pretty much like the 1 year, you know, 512 is your moving average. So could we come back to the line? Well, it tends to do that sometimes, right? Away, boom, back to it, boom, back to it, boom, back to it. So 512 would be an area, you know, that if it did dip, it could even go down something like that. Okay, right now, obviously the momentum's up. It just made a high today, so you can't really say too much other than it looks great. But everything that looks great, obviously, at some point will not look as great, especially on a short-term basis. So that would be the way I would see it. Under 545 would be a yellow flag, and underneath, you know, underneath maybe 535, and looking forward to support between 500 and 520. Okay, that's pretty much the Nvidia story. Let's go over to Microsoft. Now, defensive tactics, if you don't know them, you know, can include many things, but some of them are covered call writing. I mean, just imagine how heavy the calls are priced, right? So if you own Nvidia, you look at the out-of-the-money calls, and you're going to be selling something at a strike price, which means you're agreeing to sell the stock at that price, and they're going to pay you a premium. So if it never goes to that price, you get to keep the premium on the stock. If the stock drops down X number of dollars, but the premium was either that level or higher, you've hedged your risk. And then another strategy is the collar strategy, where you sell the out-of-the-money call and take the money and buy a put. And then you've got a parameter, upside potential, downside risk, put onto the stock. Another defensive tactic is married puts. You got such a big gain in that stock or any of these stocks, you just buy a put for X amount of dollars, and it's an insurance contract at the strike price, less the premium until it expires. Another thing is called trimming. You know, if you got 1,000 shares and things way up, you know, sell out some, trim it back. The other thing to do would be replacement trades. You get a stock, well, let's look at this one here because it's on our screen. This is Microsoft. Say you thought Microsoft had a big enough run for you. So what you could do is if you had stock you bought down at 150, you're up 100, about 75 bucks or so. So you take 75 bucks out of a share, and then you replace it, or 100 shares, and then you replace it with one call option that goes for what, $5 or $10, or a call spread that goes for $5 or $10. And now the rest of the money goes in your pocket, and then you still have a position that if the market goes up, you could benefit. But if it goes down, you've collected some cash off the table. All of these type tactics we're very familiar with, and all you've got to do is go to optionprofessor.com, stick in your email, and then every week we can update you on different things. Plus, you can communicate with us via email on any question you might have. All right, so let's talk about Microsoft. This is obviously one of the slower movers compared to some of the other stuff, but they've got a big imprint in cloud, and some would say they are the front runner in that area. And then, of course, this stock has been a moneymaker for a long time. Let's go back a year. And we know that looks like 2019 comes in pretty much in that area where these tops are. So 2019, 2017, you wouldn't want it underneath that if you're bullish. And let's take a look at it on a 6-month basis. Yeah, same price. So 2017, 2019 would be an area that you would expect it to have some support, ballpark. Now, if you want to keep it on a shorter leash on a 1 month basis, it did crack a little bit here when it cracked under 227, but it's trying to get back above it. I would say on a short-term basis, if it takes out 225, 224, it might give you more of a rollover. Likewise, if it can get going above 227 on a short-term basis, speculating, you could say, okay, if it's breaking out that way, if I bought that break, then I would put my stop underneath here at 224.5 and see if I can catch a ride. How's the RSI doing? Yeah, RSI is still above 50, so there's no break in the trend. When it gets under 50, that's when you want to see, you might see more action. Let's see if you can see that on the chart here. Yeah, you see if it's going to have a decent break from like 215 down to 200 or something, then your RSI generally is going to break that 50 number. But if it stays above the 50 number, it's pretty much every pullback should be bought, huh? All right, so there you go on Microsoft. Good company, obviously. They've all had some pretty good runs, short-term basis, 224, 225. Get this line moving down. That would change the direction of the trend a bit since it took off from this area. And if it gets under 217, 216, that ballpark area, and then that would be a more significant signal. Again, we're sharing our views and our observations. Microsoft. Okay, next one is AMD. Everyone's been touting this one as going big because, again, Intel had their problem with their chip, and AMD and Taiwan Semi came in and took a lot of that business. Now, some people are saying that business may stick to those companies, and that's why people are in it. But they've also had huge runs, both Taiwan Semi and AMD. So what does it look like now? Okay, let's go to the 1-year basis. We're going to look at 3 different time frames so we get a little perspective here. Now I'm going to be looking, you see how that's a high? And then we got a big high up here. Well, if RSI has not really made a huge high here, that would be indicating that this could be exhaustion. Let's see if that's true. Yeah, it could. You see how big we are here? And we're only here now, right? So that is indicating a divergence, and that's something to keep an eye on. Now, I wouldn't just do something off of that signal, but let's take a look at it. Where could we get a signal that it might be turning? Well, this is double top area at 87. Well, let's do this. Let's look at the shorter term time frame. That might give us a better hint. 6 month. What do you got on the 6 month? Yeah, looks to me like if you get underneath this 85 area, that would be problematic for this stock. Now, what about, and is there a divergence on this one too? Oh yeah. So you got a big high there, lower high in the RSI. No bueno. Okay, let's go over to the short-term stuff, the 1 month. 1 month, let's go. All right. So on the 1 month here, yeah, you got a pretty tight one here. 90. It looks like, well, just look at that. Under 91 would not be good. Certainly under 90 would be not good. You get this line to roll over to the downside, you might get some action. So again, if I'm short-term, we're short-term looking at this thing, a move under 91.90 would be telling me that the bloom might be coming off the rose. Let's see what that RSI is, though. It's in the ozone. Yeah, it's very high, but it's still lower than it was here. So you got a divergence on the RSI. So if it does roll over for whatever reason, again, there's more than a couple of people long this stock because it's come up from very low levels. Even in the last month, it's been as low as 78 and it's trading at 92. Your line in the sand on the upside right now is about 92.75. So you blow through there and all bets are off on the pullback. But if you do start deteriorating underneath the numbers we talked about, and you wanted to do some of those defensive tactics, that might be some time to consider it. If you think that we are getting a little frothy up here. If not, just ride the waves. And then on the downside, again, 85, 87 is another big support area on the short-term basis. All right, so there you go on AMD. Next one in the box is Tesla. Now, Tesla is selling shares, $5 billion worth of shares. Why are they doing that? Because if they borrowed the money, they'd have to pay some interest, and they are not AAA as far as their credit quality because they've got $13 billion of debt and about $5 billion of cash. So they're spending a lot of money. 2 to 3 billion a year or something like that. So they've got stuff going on in Europe. They got stuff going on in Texas, Reno, Nevada, California. And of course, they're not just a car company, but they, like I say, I saw their last report. It seemed like they made a lot of money on selling these credits that they get a lot of because they are an electric company. So I don't know. What I do know is that the stock has gone through the roof and it's been a fabulous place to be. So let's see what it looks like now. Don't forget, they just had a 5-for-1 split. So where are we now? Okay, you got another deal here where the stock is up here and it's a bigger high. Let's see what happened here as far as, let's make sure I got the right thing up here. I don't have the right thing. Hold on. TSLA, boom. But again, some people are concerned that they're selling stock, but it makes sense. I mean, come on, their stock's up 500% this year. They need to get some money. Where are they going to raise it? In the debt market or sell some of this 500% gain? What would you do? So obviously that's why they're selling the stock. Not well received though, because we're not at 500 anymore. Let's take a look and see what this looks like. On the RSI, well, look, there was the high on the RSI, which was 81. Now you're at a number, about 84. This was 86. So 86 and 84. And the difference in the two highs, the one high was at 350 and the other high was at 500. So that's a bit of a divergence, nothing to write home about, but it is, certainly something I would watch. And then this is on a 1-year basis. So the moving average comes in at 426. So if it comes back down for whatever reason, look at 426, 428, that area for support. And then let's take a shorter leash on it here. Yeah, what did I say? 425, 430. There you go again. 420, 423. So that neighborhood, right around that high there. 425 ballpark plus or minus. Looks like an area that if it had support, it might stop there. Now let's put it on a short leash with the 1 month. And it's already broken a little bit, but it broke before and didn't stay. So this is just a little bit of a turn and it broke and then bam. This is just a little bit of a turn and a break. So if we get back above 485, who knows? Who knows with this stuff? So bottom line, above 485, that would tell me that, it's back on the bicycle. Likewise, if it starts taking out 470 here, you could start seeing a little bit more acceleration to the downside. So that's pretty much it. And then basically, let's look at the RSI, see if there's a divergence. Looks pretty much divergent. You had a high there, and then it tried to rally, and then it didn't do it there, and now we're at 55. On a monthly, if you get under 50, where it has not been since August 11, and look, when we did get some kind of a drop here from 303 down to 272 when it got under 50. So getting under 50 on the RSI would confirm that maybe a more significant drop could happen. But again, it's at 54, 55 now. So monitor your RSI, and you can see here, couldn't get underneath 50, and then bam to the upside. pulled back, couldn't get underneath 50, bam, to the upside. So it could be another story like that. That's why, you know, in this kind of stock, you have to be somewhat careful because it can do anything on any day, right? But again, if I was long the stock, getting back above 490 would be very comforting to me. And breaking under 470 would become a little more disconcerting in the short run. Lord knows what the calls are going for. They've got to be going for a fortune. Okay, so that's Tesla. Big run, possibly stalled out, but it could just be stalled out for a minute and get right back on the bicycle. Let the numbers dictate what you think. Okay, so that's Tesla. And again, you know, that the big news on them is the selling of the 5 billion stocks. All right, what else do we have here? We got Netflix. This is the FANG group. Now, there's a lot of people competing for streaming, but these guys really have got the majority of the users locked up. And that's why they do so good. In other words, you hear about Peacock and you hear about, you know, these other guys getting into the show. But they are way, and Disney, way behind these kind of people. So that's why they're up 26 bucks, 27 bucks today, right? Okay. What's it look like on the chart? Let's start from the 1 year. And they might be making more money because they probably haven't been doing new content, and new content is where it costs a lot of money. So their earnings could go nutty because of why? Well, they haven't been making any new stuff, and if they haven't been making any new stuff, that means all this money that keeps coming in can be retained earnings, at least for the quarter, right? So let's see if that happens. Obviously, people are betting that way because look at the stock. The 1 year would tell you that it should hold above 510. Right? 510 ballpark area. So if you're long the stock, you certainly don't want it underneath 510. And get an idea how far it come up. I mean, for God's sake, this is in the last year. So there's your March low to something. You've had what, about a double. Not too shabby, but it has not taken out that high point, which is from July 13th of this year. So that's interesting. 576 has not been taken out yet. And let's see what the RSI is doing. Okay, the RSI is not up near that level, but it's still pretty strong. But the recent high that it had, yeah, this high here had an RSI of 66, and today's is about 63, 64. Not too much of a divergence. Again, this thing is very strong. And again, you know, unless you can break these levels of 510. And where are we on the 1 month? Let's put it on 6 month and the other. Let's see what it looks like on a shorter leash. Yeah, there's 513. So that's what we talked about, 510, 513, you know, not an exact science. And then if a real short leash is the 1 month, and the 1 month is right up there at 545, which is right where those lows are. So obviously, if you took out 545, that would be concerning. But right now, there's not much you can say about it other than it's overbought. And again, you do have a divergence here. There's your high point last time, which came in at 549. Now you're up at 560. RSI at the first time was all the way up at 85, and now you're at 74. That's a divergence. So keep an eye on it, and let's go micro here. If you're a short-term speculator, the 5-day would probably, you want this thing staying above 547, if not 550. And where's the RSI on this thing? Yeah. So again, trimming, covered calls, collars, married puts, replacement trades, all things plus others that could be on the table if you're looking to protect some of your gains. If you have questions on that, don't forget, again, optionprofessor.com, and put your email in, and then we can communicate with your questions if need be. All right, what else you got? GLD faded today, and again, I have been a little bit thinking that we're in a trading range on gold. And why is that? Because 2100 seems to be the high point, 1900 the low, and it's meandering between both. Since you're looking at GLD, I'll throw Gdx up there in a second. Of course, they got dust a little further down the list. Oh, here's Gdxj. All right, let's spend some time on the metals since they're popular. Okay, GLD on a 1-year basis. So, 195, which I guess in terms of bullion was 2100. It is up there, and then you've got, so in this particular GLD, 195 and 180 seems to be the range, $150 range. Right now you're at about 185. Your moving average is starting to roll over. This thing gets underneath 180, and it could be sayonara temporarily. The 50-day moving average is in the 1800s, which we went into, I believe, on the, this is on spot gold. And the 200-day moving average is in the 1600s. So this thing is way extended. I mean, believe me, you know, if you could use, shall we say, seasoned ways of evaluating or guessing about the market, one of them is when you get a certain amount away from your 200-day moving average, you know, you tend to come back to it. That's what it usually does. When you've got QE unlimited and you got zero interest in the bank, I mean, you can sometimes throw the book of rules out into the ocean. At any rate, this thing does look like it's obviously positive right now on a 1 year. It would be lovely to take out 190 because that would set up even further. Let's go back to the max here and see if the max will help us. Yeah. So again, you made a new high over the high there, but can you notice it looks like the Eiffel Tower right now. So right now, the Eiffel Tower comes in on this at 195, ballpark. The longer it stays under 195, obviously, the longer it stayed under 185 was not good. But this thing is just really overbought. That's why I'm saying it's in a trading range trying to digest a very short-term big move. Again, you know, if the dollar is going to go further in the tank, if they're just going to, they want inflation to run hot, these are all music to gold's ears. And they'd like the dollar to tank. Well, you know, that's the trifecta for gold, and that's why the gold's done so well. But things change, and the world's transitory. You know, down here, you know, nobody wanted the gold. It didn't look like it could go. Up here, the whole world is buying Krugerrands and Maple Leaves and American Eagles, right? So again, you know, the mood has changed, but we know that things do change both. So right now, this line up here would have me concerned short term, 194, 195. Let's look at it on a short-term basis, see if we got any indications. Yeah, again, on a 6-month, if you get back under 180, like I say, that would be something that might be indicating a rollover. What's that RSI looking like? Okay, you're hugging the 50. So this gold, you know, still in an uptrend, still bullish, and it has not cracked. Even here, it only cracked for just a little bit and then right back up again. Here, you had a more substantial crack back in March, obviously. And when it cracked, it went down pretty good from 160 down to 135. So if we do see a crack in the RSI, which we don't have now, then this could be a correction that is over. 1900 could hold, and we could commence with another up move. What would make me feel like that's happening? A move over 190. What would make me feel that the overbought condition has some more correcting to do? A move under 180. So it's a $10 window. Might not be bad to investigate what a strangle would be. What's a strangle? That's where you take an out of the money call, limited risk, buy it, and you buy an out of the money put. And you say to yourself, over the time that I am going to be buying it, the market will break out substantially above the 2 parameters. Now, you'd have to price them out. If they're extremely expensive, then it may not make any economic sense. Of course, if you do a strangle and it stays between the 2 strikes, you lose on both sides. But if you do a strangle and it drops down to 165, you probably got something to talk about. Or if it breaks to the upside and you're looking at 200 or 21 or 210, you probably got something to talk about. So it'd be something to investigate, see if the numbers make any sense, and see how much risk you want to take. Okay, what else we got here on the gold? Let's look at GDX. This has been telling me, not General Dynamics. Hang on. GDX is the gold miners. And there they are. Okay, on the gold miners, you're looking at, again, 46 was the high on this. Until 46 gets taken out, I'm going to be a believer that we're going to be a believer that there's going to be a correction. So you see that 46 number? Okay. Lower high there, lower high there. Start taking out 43, 44, and then it looks like it might be on its wheel. Let's look at the RSI if it's telling us anything. Yeah, again, just like gold. So again, this stuff starts going again. It's got a lot of real estate. Let me show you that. Let's go back 20 years on this thing and see what it's done. Now, I remember gold went to 1900 around 2012, right? Let's look at 2012. See 2011, 2012 down the bottom here? Okay. This stuff used to be a what? 66. Where's it trading now? 40. Two things would tell me a question. Why is it such a discount to the last time gold was up? That's a question. And is it telling us something about the sustainability of the high gold move? Or is it a situation where it's going to play a mean game of catch up? Obviously, that's the big question. Now, on a pullback here, well, let's go. Yeah, most of the moving averages on a long-term basis are in the 30s. So if you ever got to pull back down towards 30 to 35, that would be a very interesting area to take a look at GDX. Let's look at a 1 year. Yeah, as you can see, the 1 year is kind of, you know, the RSI is hovering around 50. So if you blew out on GDX 39, I would imagine the RSI would get under 50, and that might set the stage for a big correction. Likewise, it's on the edge. So you start taking out 43, 44, and 45. Well, you just saw how high it used to be, so you don't know. Let's look on a 6-month basis. Again, pretty much the same stuff. What about on a 1 month on a short leash? Okay, short leash, you know, has been back and forth in the last month, back and forth. It was bullish, then it was bearish, then it was bullish, and now it's turned over. Getting above 42, 43, getting above 43 right now would be pretty much required to become very positive on it short term. So there's a nice line in the sand for you. Let's look at a couple of other ones that are on the list. Gdxj, these are the juniors. People like the juniors because obviously they're smaller, and if gold remains hot, sometimes the big guys buy the small guys to buy their assets. That's the idea. And you'll notice that they've had quite a run. Let's go back 20 years on this one and put it in long-term perspective. Okay, last time we were up here, it was at 180. The darn thing's at 160. So there's a lot of real estate for it to go, right? I think that's 2011. Yeah. So when gold was at 1900 last time, this stuff was a lot higher. Question, is that Santa Claus giving you something for free? Or is it telling you that the gold move may not be sustainable? That's the answer. That's the question. Now, but clearly it's in an uptrend and the moving averages are pointing up. So, you know, you don't want to fight the tape or the Fed, and the tape here, albeit it's overbought, RSI is high, but on any dip, looks like it'd be something to keep an eye on. Let's go to shorter term stuff like the 1 year. It's going to be similar to GDX. Yeah. If you take out 54, no good. Take out 63, then you're back on the bicycle. How about we go to the 1 month? All right, on the 1 month, it's rolled over just like the other one did. So where do you want it? You want it above 60, if not 61, to feel good about it, because then all this stuff is wiped out and boom, you're up again. Where's that RSI on this thing? It did break, but it's coming back above it. So that's why it's going to be very key what gold does between now and the end of the week. If it gives it up, then this stuff is all going to go under 50, and that would indicate more of a pullback coming. You start taking out 61 and the RSI jumps to 55 or 60, then it looks like you're back on the bicycle. Let's look at silver, particularly the juniors. Now, silver, I had read that The ETF on silver has bought more silver this year than all the 10 major mines have produced. And on gold, the ETF has now holding more gold than any central bank except the US. So there's a lot of people come into this thing, and if they know what they're doing, there could be quite a bright future ahead. Or it's a situation where they get all the cattle into the bin, and then there's slaughter. So we'll have to see how it goes. But the tape still is positive for the metals, and copper's done very good too, which I'm going to show you in a minute. All right. So anyway, here, let's go a little wider range here, because I think this stuff is kind of helpful to you guys who are thinking about putting part of your assets or in already. Okay, there you go. So it's overbought from the moving average up here. The last time silver was up a lot, this stuff went up towards 21. So there's room ahead. Okay. On a 1 year basis, what's it telling us? Yeah, again, it had a correction and now it's back on the bicycle. You don't want this thing under 15 bucks, and you definitely don't want it under 14 bucks. So those are two pretty good lines in the sand. RSI, again, went down here, tested 50, and now it's still positive. Let's look at it on a short-term basis, 6 months. Again, you don't want it under 14, you don't want it under 15. Pretty reasonable. And the RSI, again, hugging the 50. All right, put it on the short leash, 1 month. Okay, just like the gold, on the 1 month basis, the thing has rolled over a bit. So you want this thing back above 16 bucks if you want to really feel good about it. That looks a little Eiffel Tower-y right there, right? A little Eiffel Tower, little Eiffel Tower. You don't want the Eiffel Tower. So again, getting back above 16 would put the Eiffel Tower into jeopardy. A move under 1550 short term. And then, of course, 1450. Now, where's your RSI? Again, bouncing. So again, this thing can get back on the bicycle. It's holding the 50. So no time to get real negative, because it could just have been having a correction. And the longer term charts are very positive, albeit overbought technically from the moving average standpoint. All right, let's talk about a copper stock that in our weekly update we've been mentioning for a long time. It's called Freeport-McMoRan. And again, when you sign up for the free newsletter, stuff like this is brought to your attention. Freeport-McMoRan, let's see. It's been a moneymaker for sure in the last couple of weeks. It's really taken off. But let's go back. Well, let's see how high it used to be, just to give you an idea. Go back 20 years. This stuff used to be up in the 65, 60 area. When gold went, yeah, there's gold. When gold last time was up at these levels, this thing was trading up at 61. Now, again, they use this stuff for construction, and construction's going nuts. So you'd imagine there's a demand. And then, of course, with the COVID, you don't know what the supplies are. I can tell you one thing, though. It's been moving up. Now, let's see about it on a 1 year basis. And ever since it got above 6, it's been up, 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 little pullback, up, up, up. So, if you gave it $1, if you gave it $1 a share, when it went to 7, you put it at 6. When it went to 7, you put it at 6. Then it goes to 8, 8, and you put it under 7, didn't get hit. Goes to 10, put it under 9, didn't get hit, and so on and so forth. Even here at a little under 14. Never got underneath too much, so it's been good. Let's see how the RSI has been going. Yeah, the RSI is, there's no divergence. This thing is going. So it still looks pretty good, although obviously you're not early. Let's take a look on a 6 month basis. Again, so you don't want it under 15. I think we said that, and 14. And on a short leash, 1 month chart. Yeah, you can tighten it up here. You see that high point of around 1590, 1580. So you wouldn't want it underneath that. And of course, if it got underneath that, it will have the potential of turning this thing over. So on a short-term basis, 1580, 1590 would be a neighborhood, and certainly 1550. But today it had a good day, and those housing stocks continue to have a good day, and it was up 3.65%. So, you know, you can't knock it. It's down a little bit in the aftermarket, not really, about flat in the aftermarket. Another one is SCCO. This is Southern Peru Copper. And let's see what that's done. Well, that wasn't up quite as much. But if you look at it on a 10-year basis, I think you'll see it's been a pretty good deal. But it seems like Freeport-McMoRan, because it's so cheap, probably has Robinhood guys buying it and everything else. Yeah, as you can see, this thing went positive at about 39, and it's up at 48. So, and the old highs are 58. So it gives you a little perspective. Again, this is considered a little bit overbought, though, basis the moving average. But again, with QE unlimited and zero interest, who knows? I see one on the list called Dust, so I'll do that real fast. Okay, on Dust, up 2.42%. Let's go back, see where it traded in years past. And in 20, you know, that last run on gold, this stuff used to be up here. I'm not familiar with Dust. What is it all about? Oh, it's bear 2 times direction. Well, bear 2 times direction is not my cup of tea. We don't really know too much about these funds. I think if I went to MIT and Harvard, maybe I'd know half of what they're doing, but it's not something I'm familiar with. But anything that has a chart like this, somebody has to explain to me why it used to be up here and now it's flatlined. Because these things have some, I don't know exactly how they work, so I'm not even going to expound on it. But I'll show you what the chart looks like on a 1-year basis. Not much help. Let's see if I can do it on a 6-month basis. So this is bearish. These guys are looking for things to drop. Yeah. I don't know what to tell you on this one. But if I had to trade it, I certainly wouldn't want it underneath 16. And I really wouldn't want it under 17. So I would keep this one on a short leash. If I had a pistol to my head and they say I had to trade it, that's what I would say. Keep it above 17 or 16.85. And then where the moving average is, 17. And then definitely keep it above 16. And then see if they're going to fill this gap there at 18. And see if gold's going to have a significant correction. This could be a beautiful place to be because it can rally, I guess, if gold goes down. But it's not my cup of tea. I'm a blind man on that one. All right, Costco. Everybody want 500 pounds of potato chips? Come on. Costco. This has been immune from the COVID because everyone went down there and tried to buy 75,000 rolls of toilet paper. Then, of course, tried to bring them back. And Costco was smart enough to say, you bought it, you got it. So right now, Costco is up again today, but not a lot because it's already had a good run and it's not a tech stock necessarily, right? So let's go back on a 1-year basis and put this stuff in perspective. Okay, so there's a high point there, comes in where that moving average comes in, 345. I'd want it to stay above 345 if I owned it. And then let's see if there's a divergence. See a high point there and a new high point up there. Let's see what the RSI is telling you. Yeah, RSI is diverging a bit, nothing tremendous, but you know, it's 80 up here and it's 71 down here, 72, whatever. So there's a bit of a divergence, but I wouldn't think it is important until it took out 345. At that point, I'd think it might be important. Okay, shorter term basis, you're looking at same deal. You know, 345 is a key number here as far as I can see. And then a short leash, pretty much the same thing. 345, 350. So as long as it stays above there, again, if you started to break under 350, 345, we'll look at 345. If you started breaking underneath there, let's see what the VIX is doing. I mean, the RSI. Yeah, it's way up here. And it's much lower than over here. But as long as it's above 50, it tends to be in a bull market. So if anything, you might get a dip. But the way it looks now, it looks like it'd be rather go to, right now, that chart looks like it'd rather go to 355 than 345. Okay, let's look at Walmart. They started a new deal to try to compete with Prime. Let's see how they look. Hang on, waste management. How's that doing? Sometimes you find the best stocks by mishitting your signals here, but that's not the case here. Walmart. Okay. You know, Walmart, obviously another one that just, has customers that are just not going anywhere. And they're trying to figure out more ways to make money on them. And obviously this membership thing is going to be one of them. So they're up 6% today. And, obviously a great looking stock. Let's look at the 1 year on it. Yeah, it had news, right? The news about the membership deal. Bam. So you 135, and obviously 135 area is going to be key. You want it to definitely stay above 135 if you're bullish. Where's the RSI? Got to be huge, right? Oh, yeah. It's never been in the blue zone in the last year. First time in the blue zone. That's, of course, the first time they had memberships, right? Okay, but the blue zone is kind of a high number. 6 month, we said 135, and look where the number is, 135. So 135 would be a number I'd mark down. 1 month, 144, 143. And let's see on a 1 month if there's any divergence here. Not too much, but it's pretty much as high as it was, right? 75 and 79, whatever. And now you're looking at a situation where it's much higher by what, $8 more or $7 more. Actually, it was almost $10 because it hit 150. So anyway, right now, it looks like it'd rather go to 155 than 145, but you do have a high point on a 1 month graph there. So let's see if that holds. That comes in about 150 ballpark area. And then you've got some lows down here. 147, 144. So too early to do much of anything on the sell side unless you want to sell calls just because it's so high. Okay, what else is happening here? Twitter. Okay, pull the lens back. Let's look at it on a 1 year basis. Okay, 1 year basis, it is right on the number here. You don't really want it underneath 40. RSI is up in the blue zone. So let's keep an eye on this one. What is that on a 1 year basis? 6 month basis? Yeah, keep it above 40. And on a 1 month basis, again, see if you break under 40, that could change the dynamic here. So keep an eye on the number 40, see if it can stay above that. And with the president using Twitter so much, it's always going to be in the news, right? All right, Apple. Yeah, Apple, another big day today. They talked about 75 to 80 million new iPhones they're going to be ordering. So they're expecting a big demand, of course. And that obviously hit the stock and made the stock keep going. This thing split 4 for 1. And I think the split was done at around 515 ballpark figure. So it split at about 128 bucks and it's currently at 134. So people are obviously hoping that the valuation on this will just continue to expand, because it used to be 20 PE, now it's at 40 PE. Some people say services and wearables are going to grow so much it's worthwhile, and everyone's going to want this 5G phone, so they're going to make a ton of money on that. That's the bet. That's what people are in here for. What price would get you somewhat concerned? Let's take a look. RSI is up in the blue zone. 125, yeah, when it were, right around where it came back out on the split, 125 area. That's a number to keep an eye on. 6 month chart, probably the same number. Yep, 125, 120. And then on the 1 month, you want to keep it on a short leash. The short leash is up at 132. Where's the RSI here? Yeah, 72. And the last time it was here, RSI was actually quite a bit higher. But you can't knock this thing. I mean, it's got a great story ahead of it. It has a ton of cash. But, you know, there are variables out there that can happen to any stock. So that's why, you know, if you owned it and you wanted to consider the selling of the calls, price them out, collars, other strategies, you know, you can price them out and see what you think. Talk to your brokerage firm, talk to your advisor, see what they think, and then go from there. But it's always nice to know how the umbrella works before it rains. And so if you're riding this thing up, you might find out how the defensive tactics work while the thing is still sunny out there. Okay, next one up is Square. Yeah, Square supposedly was lagging PayPal, but let's see what it's doing today. And PayPal was lagging Visa. So let's see what's going on. Up, good day today, up 7. David Tepper, a very famous investor, he in his 13F filing for their Q2, he bought all the payment processors, MasterCard, Visa, Square, and PayPal. So obviously he's done an analysis and they're thinking there's some value, but of course that was a long time ago. Second quarter, this thing was down at 100. Just to give you an idea. Yeah, well, this is going back only, yeah, let's go back a year on this thing. Yeah, to give you an idea, that's why you got to be careful when you look at 13F filings. In the second quarter, which would have been March, April, June, this stuff is at 60, and this thing is at 80, and this thing's at 100, not at 166. So, again, probably constructive on the space, but not necessarily at these prices. Again, very strong. You want to keep it above 50. Well, 160 would be a good number to keep it above. And then, of course, above this area here, which is 135 to 140. So those would be my lines in the sand here. And again, looking at the RSI, it does lag. So if this thing starts to break for whatever reason, you know, keep an eye on it. Right now, it looks like it wants to go through the roof like everything does. I think this is QQQ. Okay, QQQ. I was looking at this. It hit 300. 300 seems like a big round number. There you go. Let's see if it means anything. This thing's gone from 180 near the low all the way up to where it is now at 300. Moving average comes in at 287. I think 285 is a good line in the sand here, in my opinion, and our observation. So 285 would be a very important number. That's 15 bucks underneath where it is now. RSI on the 1 year, what's it doing? Yeah, it's way up in the 80. Come on, that's about as high as it generally gets, right? There's your 80. So you got to be a little careful of these things. But again, you can't fight the tape. This tape is strong. 6 month. Still going. Again, that 285 neighborhood. That's one I'd be using as a line in the sand. And on a short leash, 1 month, 297. So basically underneath 297, 295. That might indicate that on a short-term basis, it's rolling over. And on a short-term basis, the RSI is up here. As long as it's above 50, though, you notice you're in a bull situation. So that's why, again, if you have a pullback and it holds 50, that's a great time to start considering the long side. Again, unlimited QE, zero interest rates, you know, that's the backdrop. A lot of liquidity, but it does not get jobs going, and it doesn't get the solvency for some companies going. All right, why? We'll end up with why, and that's people are asking themselves, why didn't I buy Zoom 6 months ago? Okay. Why is at, it's up 111 today. It's rolled over a little bit here on this chart. Let's go back to the 1 year though, get a better perspective longer term. Okay, so you got a high there and a lower high, and it looks like this number here of 89.90 would be nice to get back above if you're bullish. If not, you know, getting underneath 85 here could accelerate things a little bit. So 85 and 90 are two good parameters as I could see. RSI is, well, it's right at 50. So if it breaks, that would be good for the bears. If it holds here and gets back above 90, that would be good for the bulls. Short leash. Yeah, so if it gets back above, as you can see, it's broken here, but it looks like it's trying to turn. And the RSI here made a lower low on the price, and the RSI did not make a lower low. So just as in the direct opposite, this is a positive sign. Getting above 50 would be very positive. And so if this thing trades above 88, then above 92, I think then you can make a good case that it's back on the bicycle. So those are pretty good lines in the sand, 88 and 92. All right, guys, we are at the top of the hour, and I've got to go, and I'm sure you guys have got to go. That's a lot to talk about in an hour, but each and every week, we do give an outline of our views and our opinions, again, on the stock market and on news in the stock market, and also on things such as the bond market, interest rates, gold, silver, copper, and things such as the agricultural sector. You know, we've seen some of those. You know, some of the futures have really turned a bit, so it's nice to keep an eye on those in addition to the stock market as well. So again, how do you get the information? You simply go to optionprofessor.com. That's optionprofessor.com. Stick your email in, and then every Friday you'll be able to get a free update from us via email. Okay, if you have any questions, optionprofessor@gmail.com is the way to go. And until we talk again, I wish everybody good trading and good luck. It's a big, fast market out there. Let's see if it keeps going. Thursday's a big day because sometimes Thursday is reversal day. So let's see how it does in the next 2 days and see if it can hold its water on Thursday. Because if it can't, it'll be interesting to see what the next weeks bring as we get closer to the election. Okay, signing off, optionprofessor.com. Back to David.
All right, sounds good. Thank you. Just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast network or app. And you can also go to TimingResearch.com to get access to the recording of this show as soon as I get it posted, and any of the past shows as well. There's also, if you go to the homepage and scroll down a bit, you'll see a list of 12 hours of indicator training from a big event we recorded yesterday. So if you haven't had a chance to take a look at that yet, it's called Synergy Traders number 18, favorite indicators. So be sure to check that out. And thank you again to the Option Professor of optionprofessor.com. And thanks everyone.